that right now. Well, Dean, thank you for being here this morning, and thank you for scrambling over to the side with a hot mic.
Oh, absolutely. You have to be ready. No problem at all. Yeah, I think most of my friends and certainly students and colleagues would say that I'm better with a closed mic over there. Probably better for everybody else.
Well, some people on the C Spire text line would say the same thing about me, so I feel you there.
I understand.
Tell us a little bit about what we've got going on today.
Well, it really is a great program. And as you said, it's our 22nd event, and this thing has exploded into, as a person said last night, just a premier event in the South for bankers. We have an excellent lineup. We start with women in breakfast here. It's going to be fantastic, and we've got incredible speakers there, including Lynn Fitch. We also, in the middle of the day here, one of our keynote speakers is Mike Bianco, so we're mixing in a little sports there. The coach always does a great job, and he's been very gracious to us over the years, so that's fantastic. Dan Brown from the ABA, he's an economist that you mentioned.
And he'll be on later today.
That's right. He's going to come on the radio, too, and there's a lot to talk about with the economy right now, so a lot of things to go over there. So it really will be a great day. We're honoring a couple of our distinguished folks at lunch, Hoppy Cole for one. We're also going to honor, actually, Frank R. Day today as a pioneer. It's the first time we've done this award, and Frank Day has had an amazing impact on the state of Mississippi with the residential college here at Ole Miss and one at Southern Miss, and just impacted so many students across the state through Trustmark and other banks here in the state.
And your chair, right?
Yeah, in fact, the chair that I hold is named for Frank R. Day, and to be really blunt, without him endowing that chair along with the Mississippi Bankers Association, I wouldn't be here. That's just the truth of it.
Really?
Yeah, I mean, that may not be a good thing for all I know, but it really is important for us. So we wanted to honor him, and then we're going to try to start kind of a pioneer, that's what we're calling it at the moment at least, in banking. And what a great person to start with. He's had such a wonderful impact.
So what's the focus of today? I mean, is this mostly for current bankers? Is this for students who are interested in banking? What's sort of the goal of these symposia?
It is largely for banking professionals, but we will have students attend too. But yeah, if you think about continuing education credits, it's somewhat akin to that. Not every banker will apply for that, but they are available. But it's continuing education for bankers. So all sorts of topics: mergers and acquisitions, fintech, the economy and interest rates, all sorts of things like that, so that they can go back into their communities and be even better bankers.
I'm not sure you want to live in interesting times as a banker, but this certainly seems like a very, very interesting time for the finance industry, with interest rates being as high as they are for the first time in a quarter century.
Yeah, it really is. And what I've noticed, too, I've taught for 30 years, and for the last 10 years or so, I'd talk about interest rate risk, and kind of the students would roll their eyes maybe and say, yeah, I mean, interest rates don't go up. What are you talking about? And now all of a sudden it's become really important. And we saw that with Silicon Valley and Signature Bank and some of those banks that failed. It was largely a function of rapidly rising interest rates. So there is a lot to talk about and a lot to consider and a lot of risks to manage and mitigate if you're a banker. So it'll be a big day for us. I think it'll be great, and it'll give people things to think about. It's really good to get together with colleagues and to talk about what they're experiencing too. So that's a big part of it, networking as well. And I think it will just be an incredible day, I think.
Can people, if we've only got about 30 seconds before a hard break, but if people are not registered, can they show up today and register, or does this all need to be done?
We can make that happen. They're going to have a name tag probably handwritten, but
well, that's
okay. We can survive that. But yeah, if they want to come, absolutely come down and we'll get you registered.
Well, thank you, Dean, for being with us. I know you'll be back with us here in about an hour, but it's a great day here at the Oxford Conference Center. It should be a great symposium on banking and finance. This is Lucian Smith in for Paul Gallo here on the Gallo Radio Show on SuperTalk happening, and we've got back with us Dean Ken Cyree. Dean, for people who didn't hear you in the 650 segment, tell us a little bit about what's going on today, what this is about, and who we can expect.
Yeah, thank you for that, Lucian. We appreciate being here. It is a great event, and what we see is that bankers, constantly need to be re-educated because things change so quickly in the marketplace with regulations and with things like that. So that's what we focus on, and we've got incredible speakers. We begin this morning with our Women in Finance session, and we've got some great speakers there. We move into the middle of the day. In fact, Coach Mike Bianco is going to be one of our keynote speakers.
That's always nice.
Yeah, and he's got a lot to say there. He's a great speaker, actually. He's helped us a lot over the years. Dan Brown, also an economist for the American Bankers Association. He'll be a speaker as well. A lot to talk about there for sure. Later on in the day, we'll go through some of our sessions on things like mergers and acquisitions or fintech or other banking topics, including HR and things like that. So a lot going on for sure. We have Lynn Fitch with us here today as well.
That's wonderful.
Yeah, so just a lot going on. It's just really incredible what's happening. And
the focus, this is primarily, I know you've got a ton of students here. I've seen a bunch of, looks like undergrads working, although I've gotten old enough that sometimes I think people are undergrads and they're late 20-somethings. But
I understand.
Looks
yes.
like this is primarily focused on current banking bankers?
That's right. This is more for banking professionals. We do have students attend. We hope that all the students would attend that could, but it's really for banking professionals because we're talking about literally current events that are going on even this morning. You know,
right.
I'm sure the economists will talk about things that happened this morning, for example.
Well, how, talk sort of interesting to me, the last 25 years, we've just had these consistently very low interest rates. Money's right. been free, effectively, and now we're starting to enter into this era where I saw some projection that you could see mortgage rates as high as 10% next year. I mean, what sort of effect is that having on the banking industry in particular?
Well, banks that are able to make new loans, let's say that they make adjustable rate loans, then that's fine for them. The problem is most of us get fixed rate loans.
Right.
So as rates go up and they have to pay more for deposits, that creates stress on the bank. And then the piece that we saw with Signature Bank and for Silicon Valley is that their security values went down when rates went up. And that's a longer discussion that we could unpack if you want later. But that created, in the case of Silicon Valley, an actual liquidity event where people ran on the bank. Think about, for example, It's a Wonderful Life where they ran on the bank. It was that, but at more digital level here in 2023. So it could create some real havoc. Frankly, uncertainty in markets is not good.
Right.
And anytime you start to see things like inflation or geopolitical events, oil price spikes, lots of things like that impact the economy and banking, and it makes bankers reluctant to lend. It makes people reluctant to borrow. It makes looking at a project difficult because it's hard to project what's going to happen 2 or 5 years down the road. So that's what we see, and that's why things like this are so important, to try to talk about these issues, find out what people are doing to handle them, what are they seeing, things like that are very, very important for the industry, which in turn ends up being important for the communities in the state of Mississippi and the region.
Absolutely.
So that's what we're trying to do. And, I guess the great news is when I didn't realize it when I chose banking as a career in the academy here, but things change so rapidly, I'll never be out of a job. Right?
That's right.
It's not like it's things that, math that maybe that doesn't change very much, right? Things change daily, and it's really difficult to keep up, even if you're paying attention.
You talked a little bit about variable rate debt, and that to me is one of the big changes. Is even 5 years ago, it wasn't necessary. Maybe it should have been scary to take on variable rate debt, but when you were talking about a 50 to 100 basis point swing, that's what's a single point. But now we're talking about people who may be going up 6 percentage points in terms of what they owe as a result.
Right, and that will create a lot of pressure in household budgets, which will also impact the economy. I mean, most likely, right, unless there's some offsetting factor. But, yeah, it creates a lot of problems when you see interest rates spike like that because people's payments go up and they simply have less money. Then you
right.
throw in higher gas prices and other inflation. It just creates a lot of difficulty for the consumer, which then in turn creates a lot of difficulty for banks and the economy and the community. So it's a vicious cycle. and then we have to be careful, or it just spirals out of control.
And what time do things kick off? Are we just about to be?
We're about to start the breakfast here at 8, and then the main room gets going at 10.
Well, that's great. Well, we're coming to you live from the 22nd Annual Banking and Finance. Good morning, everybody. This is Lucian Smith in for Paul Gallo here on the Gallo Radio Show on SuperTalk, Mississippi. We are coming to you live from Oxford in the Trustmark Bank studio. Life's beautiful when your bank fits you to a T. Trustmark. People you trust, advice that works. To learn more, go to trustmark.com, member FDIC. Well, still with us is the Dean of the School of Business here at the University of Mississippi, Dr. Ken Cyree. We were talking a little bit before the break about interest rates and sort of the effect that we're going to see from interest rates getting higher. I mean, do you have a sense of, I assume there are people who might have 5 years ago or 2 years ago even contemplated buying a business or building a business where now those deals may just not pencil out as an effect of interest rates. I mean, do you think that will have a drag on the economy?
Oh, yeah, that's exactly right. In fact, this is basic finance. We teach this all the time. When interest rates rise, all else constant, the same project that might have been a good project before is no longer a good project just because the costs go up with interest expense. And that could be true for, apartment complexes or a strip shopping center or whatever the case may be. So there's no doubt that will have an effect. So we don't really know what will happen long term. If I could predict interest rates, I would probably be teeing off in Hawaii here in a couple hours playing golf. But I cannot predict.
If you figure that out, give me a call
yeah, it's very difficult. It really is, and there are so many factors. We tend to look at it from an academic side, just at one or two factors, but there dozens, if not hundreds of factors that impact things. So that's why it's so difficult. But bankers have to be ready to adjust. Consumers have to be ready to adjust. And we're pretty good at it. But certainly what we've seen over the last 18 months has been very unusual. Interest rates really haven't risen like this, honestly, since the 80s.
Right.
And I'm old enough to remember that. I remember bad disco music and high interest rates and things like that. But
yeah, I remember my parents who bought their first house in the 70s talking about how they literally couldn't, they had to have it financed by the person who sold it to them because the interest rates that you could have gotten from a bank at the time, for them, you just couldn't pencil out the house purchase.
Yeah, I'm virtually certain we paid at least 12%. I want to say probably 14% on a house, but it's difficult to remember that far back. But, these are not unprecedented rates, but they do have an impact. And the impact is that everything becomes more expensive, right? And it's much like gasoline prices. It flows through everything in the economy. So if you're borrowing money, it doesn't matter if you're a restaurant or a warehouse or whatever the case may be, your cost just went up.
I wonder, and tell me if I'm badly off base here, but my sense is a lot of commercial loans may have a 20-year amortization. So for people who aren't familiar, it means that the payments are such that you're paying it off over 20 years, but have a 5-year term. So you've got to have it completely paid off or refinanced. And I just wonder how many, apartment buildings or small and medium-sized businesses have people financed on those types of loans that at a 4.25 rate made great sense, but suddenly they're underwater at 10. Do those people throw the keys back to the bank and walk away, and sort of what effect that ends up having?
Well, no, you're absolutely right. I don't think they do that. They probably raise rent, and we've seen that, right? So people say, my costs went up, I'm going to raise rent, and then all of a sudden if you're renting a property, your costs go up. And we've seen, even in the state of Mississippi, rents going up $200, $300, $400 a month, which if you're not expecting that, it's quite the shock.
And can be the difference between being in the black and being in the red for a lot of folks.
Absolutely. Or you're going to have to cut back somewhere else. And the way that commercial loans do work, there are kind of, if you want to think about it in these terms, they're kind of operating loans which tend to roll over quickly, right? It could be a quarter, 6 months, or a year, and you're rolling those over a line of credit or loan commitment or something like that. And then there's longer-term financing of fixed assets, so buildings and things of that nature. And what we see is those projects, it takes a while to catch up, but it means that new projects under those conditions may not be undertaken now because it's too costly. Or if they do undertake those projects, there's going to be a higher price on the other end for the consumer, whatever it might be. So if it's rent for a shopping center or something like that, that rent's going to go up once it gets built, given the cost. And it's, by the way, it's no different for materials too, right? If steel goes up or wood goes up or something like that and doesn't come back down, you've got exactly
just one
the same
more
problem.
input that's gotten more expensive.
Absolutely. I guess the difference here is that interest rates impact virtually every business that borrows money.
Right.
Which is
virtually every business, right?
Yeah. So it really creates some pressure when interest rates rise, especially this rapidly.
Well, it's an interesting time, and I know a difficult time for a lot of businesses. Tell us a little bit about how is the business school doing? I mean, what are you all up to generally?
It's fantastic right now. You know, we struggled in COVID like everyone did, and you know, that was difficult. We got through that as best we could. I think everybody did that. Right now, we're at record enrollment in the business school.
That's right.
4,900 or so just in the business school. If you added in accounting, we would be over 6,200. Of course, these are not official numbers, but we'll be in a week or two. So we're doing really, really well. Record freshmen. We'll have around 1,500 freshmen as well, which is by far the biggest freshman class we've ever had. A couple of years ago, we had about 900. So that's the amount of growth we've had in really 3 years.
And what do most of? So when do you declare? I mean, when you're admitted, would you go into the business school?
Yes,
or is that something?
Yes,
okay.
Yes. You get into the business school immediately. Your major is chosen for us after 36 hours.
Okay.
And then it depends on GPA and some things like that. A certain 36 hours.
That makes sense.
Yeah. So you come in as a business school student, and a lot of our competitors, like the University of Texas, they don't do that. So we think that's a strength for us, that people can come in and be a business major right from
off
the get-go,
right.
and then they're ready to go. And we have some freshman business courses too, which kind of get them prepared to move forward into hopefully a major in the business school.
And do most of the students, I know it's a mix, but when you talk about the undergrad population, do most of them come with a strong idea of what they want to do in business, or is it, and I feel like I can ask this as a political science undergrad, is it more of a, I don't know, I like political science, so what the heck, let's start over in this area?
Yeah, I think that, and this is anecdotal, I don't really have hard data on this, but by and large, when students come in, they don't know what they want to do. And the good news is that we have a broad menu of courses that are across the entire spectrum. Almost every business school does this, so marketing, finance, supply chain, statistics, accounting, economics, things like that. And so the students can come in and take these courses and then think about what they like and what they're good at, and then they can specialize in those areas. So that tends to be the way that it goes. We also have general business, which is more of a broad overview, and I would argue the vast majority, if I had to guess, I'd say probably 80% of the students don't know what they're doing. We do have some that will come in and say, for example, I want to be in risk management and insurance, and then, you know, they go through, or banking or whatever it might be. And we're one of the few universities that still have a banking major.
Really?
Yeah, they're less than 20 now in the United States.
Why has that sort of gone out of favor?
Well, I think the big thing there was in 2008 through 10, you saw such chaos in the industry that there just weren't many people getting hired into banking. That didn't help. And then banking is really a subset of finance or economics, if you want to argue that too. And so you can get more general education and then get kind of on-the-job training.
Okay.
I've always felt like it's better to be able to drill down a little bit deeper and talk about things like lending or interest rate risk or something like credit risk for that matter. And so we've had this since I've been here. I came here in 2004 teaching banking. I may be the last guy in the country that does it. I don't know, but it really is. People have kind of gotten away from the specialized banking major. There are Texas A&M has a very big program, for example, but Ole Miss has been going now for over 50 years in this area. And I would argue, I'm biased probably, but it's a strength.
You're a banking guy.
Yeah, I'm a banking guy, so I think we do a very good job there. And this symposium is part of that. I think we add a lot of value through the symposium to the community and to the industry. And I really think, as a guy said last night, this is one of the premier events in the Southeast for bankers.
That's great. It's a great thing that Mississippi's, it's here in Mississippi. We're not going to Birmingham or Atlanta or somewhere.
That's right.
For it.
It's right here in Oxford. We've got people coming in from all over New York, a couple speakers from New York, for example, and just all over the country, great people coming in, and it really adds a lot of value.
And it looks like it's both a mix of what I would think of, and this is probably not the right terminology, but sort of retail banking and the investment banking sector.
That's right, yeah. We have both. In fact, we'll have a couple of speakers who are investment bankers, and a lot of them will be commercial bankers. And I don't know what that mix is precisely, but there's a good number of investment bankers here for sure.
But shows what a broad field, when you say banking, it's not as simple as just, just one specific area.
Our title sponsor is Stifel KBW, and they're an investment bank,
right.
Really. So they do a lot of debt issuance and stuff like that too. So they're not a commercial bank. So we've got a lot of people that do a lot of different things here. So it really adds a lot of value and breadth to what we're trying to do.
Well, that's great. Well, Dean, I appreciate you taking the time to be with us, and hopefully see you again at 8:50 if your schedule allows. Y'all, thanks for being with us this morning on the Gallo Radio Show. This is Lucian Smith in for Paul Gallo here on SuperTalk Mississippi. Stick with us. We got more coming up after. Good morning, everybody. This is Lucian Smith in for Paul Gallo here on the Gallo Radio Show on SuperTalk Mississippi. Final segment here. I tell you what, it's the fastest 3 hours in radio, and appreciate your beginning your day with us. Have with us again Dean Ken Cyree of the University of Mississippi Business School. Thank you for coming back, Dean. You've been like a co-host today.
Thank you. Yeah, I guess I'm getting a lot of pay for this. Is what I think, right?
Yeah, that's right. That's exactly
the same rate I normally get. Yeah, exactly.
Well, for anybody who's not familiar, tell us again what is going on here at the Banking and Finance Symposium.
Well, this is our 22nd symposium, and it is essentially a place where bankers can come. We do have students too, but it's typically professionals, both investment banking and commercial banking, who come here to learn more and to do really continuing education. So we cover all sorts of broad topics, things like interest rates, which I know you heard from Daniel Brown earlier. And he'll be speaking later on things like fintech, mergers and acquisitions, hiring talent, things of that nature. We've got a couple of keynote speakers that will talk about different topics too.
It's a great schedule. I mean, I'm not a banker, but I'm sort of. If I didn't have my wife's birthday is tomorrow, so I'm happy birthday if you see Bethany Smith tomorrow. But I'm rushing back to Jackson to take her out to lunch. But otherwise, I'd be tempted to stick around for the whole day.
Yeah, we've got Mike Bianco coming in at 10.
Saw that.
He does a great job. He really is good to the academic side of the house and is able to communicate really, really well, and it resonates with our bankers. And in fact, right now when you think about the uncertainty and everything going on, it's a lot like sports, really, banking is right now. It's just a lot of real issues and challenges that they have to deal with, and you have to be nimble and able to move in the right direction and adjust as things are needed. And that's what sports people do that are successful. You may have a game plan, but I think it was Mike Tyson who said, everybody's got a plan until they get punched in the mouth. And
right.
That's very true. It's true in business. It's true in banking as well. So that's kind of what the day is all about, is trying to deal with these things. We're adding a few new topics like blockchain and digital assets and artificial intelligence as well, and strategic planning and things like that. So it's always something new every year, and it's a very changing market. So it really is something that it'll never go away unless people want it to, I suppose. But there will always be topics that are important to cover in the area. So we've been doing it for 22 years, and it's been great.
Well, it looks like it's going to be a great day. Talking about the business school, be curious to hear what your pitch would be. If you're a kid thinking about, you're going to college, trying to decide which school you'd be interested in, which majors you might be interested in, what sort of the pitch for going ahead as an undergrad and thinking about going to the business school and having that be what you do for your 4 years in college?
Well, I'm definitely a big fan of business. I think it is one of the best majors you can choose. In fact, I remember I think it was last week, maybe this week, to someone who was thinking about pre-med, and they said, "Can I do business in pre-med?" And I said, "That is a great combination."
Yeah.
Most of the doctors I know, most of them struggle with the business side. So if you know that side,
that is far more diplomatic than I would have put it. And I'd say the same thing about lawyers.
That's
also.
right, lawyers or a lot of people, and that business training comes in really handy. So I think it's a great major. I've always said this: if you can understand the numbers and you can look at a financial statement, you can figure out whether or not you're profitable. You can go through things like that, and you can deal with people. Those two factors will allow you to be successful most of the time.
That's a good point, because I mean, whether you're a lawyer or a doctor or anything else, I mean, you may be a professional, but you are running. If you're in private practice, you're running a business.
Absolutely.
And I suspect there are a not insignificant number of lawyers, doctors, probably not accountants, but who probably couldn't look at a financial statement and tell you really what they were seeing there.
No, that's right, and I think it's incredibly important for people to get that training, and they can go off and do whatever they want. But if you're an artist and you don't understand you don't understand that my costs are X and I cannot sell it for that, that's a problem. You may love that piece of art, but that's not a sustainable model.
You're not going to be a professional artist.
That's right.
If
that's
your
exactly
model.
right. Whatever your model is, you have to have enough to make it worthwhile, and you have to understand the numbers for sure.
Well, we talked a little. If you sort of had looking through a crystal ball, do you think we're? And I know none of us know the actual answer here, but are we going to have a soft landing with these interest rates, or do we all need to brace for something a little harder?
Pretty tough to know. I think the experts would say that we're in for at least another 25 basis point move. I think that's probably accurate.
Okay.
It wouldn't surprise me to have two, and then we don't know, right? They keep saying they're data dependent. To some extent, I believe that, and certainly the market moves quicker than the Fed, but what we're seeing right now is most people think rates will fall next year if you look at the yield curve, and that's probably because most people are expecting a recession or at least some sort of slowdown.
Well, I hope we don't get it, but it certainly seems like there's a major risk of it.
Yes.
We've got about 10 seconds left. You've got a big day. You've been with us a ton this morning. Any sort of final thoughts?
Come to the Ole Miss Business School. Send your kids here. It's a great place. We have wonderful faculty and staff, and we're willing to make your kids leaders and successful business people, and that's what we do all day long.
Well, Dean, thank you for being with us. Thanks for spending so much time with us, and I hope the rest of the symposium goes well.
Thank you so much.
Y'all, this is Lucian Smith in for Paul Gallo here on the Gallo Radio Show. Thanks for starting your day with us. We're coming up on the weekend. I hope you have a great weekend.